Did I arrive at the car at 3:31?
What'd you say, man?
Did I arrive at the car at 3:31?
Yes, you did. Yes, you did. All right, everybody. Welcome for Late Night Crypto Talk. A little bit early tonight because I have a lot to do this evening. Bitcoin Brandon from Los Angeles, California. Go ahead and type in the chat box where you are logging in from. I see Anthony Pinkston, Denitra Blackston, all the way from Philly, Stan Williams, Darnell Abram from the OKC, Marty Bali from Victoria, Texas, Wayne from Greensboro, North Carolina, Moshe from Philly. I see Philly in the house. Stan from Tampa, Florida. Pat from Atlanta. Clevie Stewart from New York City. Shauna Ross from Charlotte. Gerald Gardner, Detroit. Ray Fountain, Cleveland. Got people coming in from all over. That's all East Coast stuff. Where my West Coast people at? Oh, it's only 5 o'clock here. Still early for us on the West Coast. They're eating dinner on the way home from work. As a disclaimer, I'm not a licensed financial advisor to be dispensing financial advice. I read the news, give opinion, share my suggestion, and it is up to you to make an informed, intelligent decision on any investment decisions you want to make. There's 4 rules I live by in the crypto space. Rule number 1, crypto is education is everything. It is key. Rule number 2, never invest money that you cannot afford to lose. Rule number 3, always get your return on investment back as fast as possible. And rule number 4, where do you see yourself in 3 months, 6 months, a year from now? What vehicle are you using to make that happen? Make a decision, take action, and remain focused. Do not get distracted. There's so many things out there that can distract you. That if you do those things, you have limited resources. So do not get distracted. Now, this is not going to guarantee you success, but it will at least minimize your risk. And that, ladies and gentlemen, is the most that we can ask for. Hello, Bethany. Here's my West Coast people, Bethany Gibbs and LaShayna. Oh, Jairus was doing a live. I missed that. I've been on the phone all afternoon. I have to go back and listen to his live. All right, so let's go ahead and get things kicked off. I got to get my Bluetooth on so that I can get up and walk around. Also, turn on screen share. Yeah, that's right. You say California traffic. I have not driven in California rush hour traffic in a very long time unless I'm absolutely forced to. There's more West Coast. Well, Kathy's not really West Coast. She's all the way out in the Pacific, all the way from Hawaii. And it's not late night for her. Gina Ray, Skirtala from Philly. Welcome. Oh, screen share. Yeah, let me turn that on. Share screen. All right. Fidelity, and I got this article from Bethany Gibbs. So thank you, Bethany. We're going to read this together. I haven't read the article just yet. How you doing, Tracy? Okay. So here's another sign of mass adoption that's going on in the crypto space. Fidelity, the 2.5 trillion, you hear that number? $1 trillion Wall Street giant is launching a brand new institutional brokerage and custody business for crypto. Haha. Fidelity has announced they will launch crypto custody and institutional brokerage offerings through a brand new business next year. Fidelity Digital Assets was announced at an industry conference by Tom Jessop, head of corporate business development at Fidelity. The block sat down with Jessopo to get the inside look before the announcement. Fidelity, the $2.5 trillion asset manager, is diving into the world of crypto with a brand new digital assets business. The financial services firm, which is known for its retail brokerage and 401k offerings, announced Monday its cryptocurrency custody and brokerage solutions for institutions. The new services will be offered through a new entity, Fidelity Digital Assets. Tom Jessop, head of corporate business development, told The Block in an interview. While the initial custody solutions will be for Bitcoin and Ether, the firm also plans to custody other digital assets down the road. As for the trading side of the business, the firm will provide so-called white glove services to asset managers to help them enter the market. Fidelity will act as a broker for those clients, routing orders to OTC desks where the firm can find the best price for clients. Speaking to the blockchain in an interview, Jessop said the firm was excited to announce the new products given the increasing level of demand in the market. The products have been in the works for many months. A lot of the effort over the last 6 to 9 months has been taking what had already been built and elevating it to a level in which we were comfortable to go to market, Jessop said. While there are many places for consumers to buy and trade crypto, we didn't see analogous developments for institutions. We made a decision to move in this direction, and that has been validated by the prospects we are talking to now, he added. The platform is set to launch in 2019. Jessop made the announcement at a joint industry conference with Bloomberg LLP and Galaxy Digital. In September, CEO Abby Johnson, a self-avowed crypto enthusiast, hinted at a big cryptocurrency announcement at a financial technology conference in Boston. We've got a few things underway, a few things that are partially done, but also kind of on the shelf because it's not really the right time, Johnson said. We hope to have some things to announce by the end of the year. Fidelity's efforts in crypto began in 2014 with research and development, Jessop said. So this was not something that was brand new. They've been working on this for years. Says then the firm examined mining in 2015. Oh, wow. So those of you that's like, why are these guys keep talking about green mining? Why is mining so important? You've got a $2.5 trillion fund that's been looking at mining since 2015. Clues. At the end of last year, the firm saw more opportunities in the institutional space among family offices and new crypto funds that were starting up. In 2017, the firm partnered with Coinbase to allow its clients to view their crypto holdings on the digital asset exchange. Coinbase, you see the connections here. The largest American exchange, Coinbase, is partnered up with a $2.5 trillion investment firm. Clues. Fidelity's commitment, not only to this space, but other innovation projects is significant, Jessop said. As I go around and talk to folks at Fidelity, I think the thing they are surprised about is that markets are already this big, and there is a meaningful activity, and there is a future value to the underlying technology that probably transcends Bitcoin and Ether. I'm going to give that to you in layman's terms. What he just said. These people are rich. They deal in billions and billions of dollars of transactions on a daily basis. They're surprised that without their involvement, without their money, that Bitcoin and crypto got so big. In other words, they believe the technology that's created Bitcoin and crypto is here to stay long term, and they better start to invest in it because they believe that the technology is even bigger than Bitcoin or Ether. In other words, they are already planning for the next evolution. See, Bitcoin and Ether right now, and I agree with this, is like Yahoo and MySpace to the internet. But what happened? Google and Facebook took over. Bitcoin's just the first. Is not going to be the last, and I don't think it's going to be the biggest. It's just the first, and I think it's always going to be a store of value. That's just my opinion. I could be wrong, but we'll see. There's two different competing theories on that. I think once you, look at this, educate people, stop right there. The manager of a $2.5 trillion research and development for Fidelity said, once you educate people, what do you think we're doing Bitcoin boot camps for? We are bringing crypto awareness to the masses. So once you educate people on where things actually are and get past the hype, it is like an eye-opening moment for people. You see that? Reading those articles yesterday gave me an eye-opening moment. And I know what's going on in this space. But you never stop learning. I learned some stuff yesterday. It really opened my eye. And so I saw a bigger picture of where this thing's going, things I didn't even think of. Reporting for Business Insider, this reporter first blew the lid off of aspects of Fidelity's cryptocurrency ambitions. In June, the firm released internal job ads seeking out talent to engineer, create, and develop a digital asset exchange and build out first-in-class custodian services for Bitcoin and other digital currencies. The foundation is being built underneath us. Your opinion doesn't matter. Your belief in it doesn't matter. Whether you get involved in it or not doesn't matter. You're not going to have a choice. Things that run the world behind the scenes is all changing right before our eyes. Fidelity's reputation might give it a leg up over smaller providers of institutional custody solutions, including Coinbase and BitGo. Cryptocurrency assets, which require private keys to access, are difficult to store. And the lack of well-known institutional custody providers in the space is one barrier that has kept large asset managers and investors from diving into the space. To be sure, Fidelity's crypto custody offering does not have a qualified designation. which may turn off some firms. Still, the product could make regulators more comfortable with an exchange trade fund tied to Bitcoin, some experts say. This custody solution from a 72-year-old, $2.5 trillion established financial institution may pave the way for regulated investment vehicles such as ETFs. Gerbach's head of digital asset strategy at VanEck told The Block. As for brokerage solutions, investing firms have been crying out for firms to sit in the middle of their portfolio managers and the spine-tingling market for digital assets. Other firms are looking to break into this market, including Coinbase, the cryptocurrency exchange operator. Great find, Bethany. Great article. All right, and the last article up. This is Spread the FUD and Buy the Dip, How the Rich Get Richer. This is an article I'm going to make sure I send over to my dad. My dad is an institutional guy, conservative. You know, he's like a Warren Buffett type. And all this newfangled technology and stuff, you know, he doesn't understand too much. So he listens to the establishment guys when they're talking about, you know, Bill Gates and Warren Buffett and Jamie Dimon, and they're talking all negative about crypto. They must be right, right? They're established, they're rich. So if they say something negative about Bitcoin and crypto, that means that it must not be a good thing, right? See, here's one thing that I learned from my mentors about wealthy people. They will never tell you everything that got them to where they are. They'll only tell you just enough. Why? Because you can become a competitor then. That's their competitive advantage. They also know anytime they open their mouth, whatever they say can affect their company, their shareholders, their brand, their market. I mean, look what happened to Elon Musk when he decided to go on a radio show and smoke weed. What happened to the stock of Tesla? You got to be careful what you say. So anytime there's a microphone in front of their mouth and they say something, it's calculated. It is well thought of. They are not shooting from the cuff, no matter if it looks that way. They're not stupid. So I never listen to what they say. I always pay attention to what they do, because they will say one thing and do something completely different. Follow the money. So I'm excited to read this article. I haven't read it yet. Let's see if we can learn something here. Jamie Dimon of JP Morgan Chase famously labeled Bitcoin as a scam in September 2017. It's over a year ago. Later, you know what? That's one of the first times I made a lot of money in crypto. I flipped a lot of money because Jamie Dimon, and I did a Facebook Live on this. It's out there in Facebook somewhere. When he came out and he was blasting crypto, I was watching the market because I was actually actively day trading at that time. I don't do that anymore. But I saw the market was about to drop because of not necessarily what he said. There was a lot of things happening around that time. You had the Bitcoin fork. You had China banning everything crypto. You had, Bitcoin Cash that was coming out. You had Jamie Dimon running his mouth that made major news. There was a lot of stuff happening, and I decided to take advantage of it. I thought the market's about to drop, so I pulled my coins. I didn't sell, but I pulled them into Tether. And right after Jamie Dimon made that statement, also there was a major hacking that happened in the North Koreans hacked one of the top major exchanges in South Korea. All within all this went down within 24 hours. So I kind of had a hunch the market was about to drop. So I pulled my coins out and put them into Tether at the high value. The market dropped dramatically. You know what happened? 2 days later, Jamie Dimon turns around and buys up a bunch of Bitcoin. Not just some Bitcoin, but the most Bitcoin assets on the Swedish exchange in the world. We're talking millions worth. He bought the dip. He helped, I can't say he was the cause of it, but he was a contributing factor to fear. The market dropped dramatically. Then he bought it on the cheap and it skyrocketed sky high. I made a lot of money off of that. Let me read this. Let's see if I'm missing anything here. So later it turned out JP Morgan is buying crypto. In a disruptive market, the wealthy know how to play their hand to make sure all the cards stay with them. It has been this way since time immemorial. Cryptocurrency is the latest market in which this is happening. Let's take a look at how they do it. So you want to pay close attention to this. That's right, Bethany. Bethany's been listening. So you want to pay attention to this because you just do what the wealthy people do. If they make a move, you make a move. Taking a look at Bitcoin chart recently, the number of drops and spikes in price movement stand out cliffs in a landscape over which countless sweaty palms have hovered whilst they contemplated hitting that sell or buy button as the Bitcoin price yo-yoed. This morning, October 15th, the Bitcoin price rocketed upwards by almost $800 in less than 20 minutes. As collectively, we asked, what is going on here? I did last night. I'm like, hey, what's going on? Is something happening in Asia? Why did the market jump $20 billion so fast? These are the movements of whales, big players in the market, which buy and sell Bitcoin in quantities you and I can only dream of. Quantities so big that when they move them, the market shakes and you get spooked by the movement. They know this and use it to their benefit. Again, this is also where education is the key. If you're educated, you're not going to get spooked and make decisions based off of emotion. The uneducated people do because they feel they fear they're either going to lose all their money or they're going to miss out on the next big run. So they base their decisions on reaction to other people instead of sound education to be able to read the markets themselves. This is the vast majority of people in the crypto space. I was shocked when I went to the Blockchain Expo in London and 50% of the people in the room had no idea what was going on. And these were people who actually invested in being there. What do you think the rest of the population is doing? They're clueless. So education is the key, but let me continue. You see, it's part of a larger market force commonly referred to in the cryptoverse as fear, uncertainty, and doubt. The successful deployment of it as a disinformation strategy can be used to great effect by large institutions. Price manipulation and insider trading is illegal, but media manipulation is often used as a backdoor to achieve the same end. The general thinking, label a product as junk, and if enough investors can be successfully spooked enough to sell their positions, big institutions can move in and clean up during a sell-off. In a nutshell, create fear in order to get cheap prices. Ha ha ha. Norio Rubini says, indeed, after 10 months of a bear market, that has turned into a total apocalypse and meltdown, typical crap coins down 95% and other major coins down 80%, they are a pack of rabid, angry, hungry, desperate, mean, violent wolves. Says, don't provoke the pack after 10 months of a bear market. I like that. It is a well-used blueprint in the late 1990s. During the bear market at the time, investors were drip-fed a sentiment that their tech stocks were junk by many institutions. Many investors taken in by the FUD sold off stocks in Apple, AOL, Microsoft, and others, which later boomed after institutions had bought up these sold off stocks and pumped $1 trillion into the market between 95 and 2000. The same happened in the UK in 1992, when in an exemplary use of FUD creation, and FUD is fear, uncertainty, and doubt, for personal advantage, George Soros shorted the vulnerable British pound. Spooked by Soros' actions, a mass sell-off ensued, causing the pound to plummet. Soros then proceeded to buy up vast amounts of the tanking British currency, making himself $1 billion in the process. I think there was even a movie made about that. And it has been happening with cryptocurrency for the last year. I told you, I've been saying it's in market manipulation. Two distinct sides emerge in the debate: those who believe Bitcoin and those who label it as a scam. Jamie Dimon, Warren Buffett, and Peter Schiff all come to mind as people who have dismissed Bitcoin outright. Whilst no one knows what the future holds for any new asset, the aggression with which some rail against it should sound alarm bells in your head. What do they have to lose? Remember, I asked this question last year. I said, if he doesn't care, because Jamie Dimon, he said something that really caught my attention. When the reporter had a microphone in his face, and she actually asked him a tough question, because he said, yeah, this Bitcoin is a bunch of crap. People are going to get killed over it. You're stupid if you do it. I'm going to fire anybody in my company trading on it. You know, why do I care about Bitcoin and crypto? I mean, JP Morgan does $6 trillion a day in transactions. And this crypto thing, I mean, it's only like $300 billion. I mean, that's not even on my radar screen. Then the reporter said, yeah, why do you care? If it's not that such a big deal to you, if it's only a blip on the radar screen, why are you talking about it so much? When she said that, that caught my attention because it's psychological. Think about it. Have you ever had a boyfriend or girlfriend that you just loved so much, and then they break up with you and now they become your hated enemy? So you try to play it off to your friends like, it's all good, I'm better for it, I'm all about me now. I'm gonna discover me, become better me. So whenever you're out with your friends, you keep talking about that ex. Your friends like, why are you still talking about them? I thought you wasn't sweating that. I'm not talking about it. Yeah, you're always talking about them. Why? Why do you care? That caught my attention. That's why I was able to make that move, and I made a lot of money. I'm like, he's up to something. He's up to something. He's running his mouth for a reason. It's like, why should an elephant care about an ant? So, well, perhaps it's more about what they see they can gain. These people are professional investors. My biggest problem with crypto is also my greatest attraction to crypto. I'll start with my attraction. It's the fact that there is no barrier of entry. It doesn't matter who you are, the color of your skin, the language you speak, your sex, what country you were born in. None of that matters. Everybody, and I mean everybody, has access to this wealth. You only need a cell phone, access to the internet, and a willingness to learn. And I can go down on Skid Row right now in downtown LA and find all them homeless people got freaking cell phones and internet access. I don't know how, but they do. But it's that third part there, the willingness to learn. That's the key. And that's where many people will fail, because they will not be willing to learn. But anyways, there's no barrier of entry except yourself. But this is also the worst thing I hate about crypto, that there's no barrier of entry, which means we have people who have no business being in this space jumping into this space. People who have no idea what's going on, nor do they have a willingness to learn, dropping $100,000 on something because of a rumor. And the moment they lose money. They're the first to scream, it's a scam. It doesn't work. They run home and tell all of their friends and family, I lost money in that Bitcoin stuff. Don't get involved. And now they just killed their entire family's opportunity for financial freedom because they were stupid. It's like the blind leading the blind. That's the only issue I have, which is why I am also passionate about bringing crypto awareness to the masses. We got to get you at least some basic education so you can make your own decision and not listen to what somebody else is doing because you don't know what their agenda is. Anyways, and this is going on before our eyes. The week-long following Jamie Dimon's statement, which caused the Bitcoin price to drop more than 20%, JP Morgan Chase bought the dip in the form of a huge stock of Bitcoin ETNs. George Soros, similarly, after calling Bitcoin a bubble in January, bought into crypto in April at a considerably reduced price. Goldman Sachs is another example, which after saying most crypto will go to zero, announced they were opening a crypto trading desk with $400 million capital behind it. Understand, they don't just wake up the next day and say, I guess I'll throw $400 million at this thing that I said was going to go to zero a couple months ago. This was in the works. They planned it this way. So what is the takeaway here? Stay calm, definitely. But more importantly, we should look more at what influencers do rather than say, who is this? Are you listening to my crypto talks or something? Haven't I been saying that for a year? Don't listen to a word they say. Alex Rithod, follow what they do. See, reading articles like this lets me know I'm on the right track. He just said it. Don't listen to what they say. Rather, look at what they do. Despite all the FUD out there, the big hedge fund managers of Wall Street are buying into Bitcoin. Hundreds of millions of dollars are flowing into projects which trade cryptocurrencies. The figures at the tops of these firms are experts in their field. That's why I said Warren Buffett, Bill Gates, Jamie Dimon, they all know and understand this blockchain and crypto stuff better than all of us combined. Don't let it fool you. Even Warren Buffett, he knows exactly what's going on. And these billionaires are shaking the tree. See, because here's what they think. They don't believe you belong in the same category as them. You're not in the same group. So what they do is create an environment that's going to spook you out of it. You're going to run for the hills. You're going to be scared. And then they're going to buy up all your stuff. That's like if somebody wants to take over a neighborhood. Gentrification, you want to move everybody out. Wait. Kathy's giving me some breaking news. BitPay announces stablecoin support for merchant settlement. Didn't we just cover stablecoins this morning when we talked about Tether? Paxo, the Gemini, the Winklevoss twins are coming out with their own stablecoin. And look, BitPay is as well. Anyways, hundreds of millions of dollars are flowing into projects which trade cryptocurrencies. The figures at the tops of these firms are experts in their field with companies and bottom lines to protect. They wouldn't buy it if they didn't believe in it. Let me take you a step further. A year after Jamie Dimon ran his mouth against crypto, JP Morgan has partnered with the Australian government to implement blockchain technology into their entire financial system and government. Yeah, JP Morgan did that. Bill Gates, who in 2000, this is why I didn't believe a word he's been saying all year, because in 2014, he's on video as saying Bitcoin can't be stopped. I wouldn't be surprised if he has something to do with Satoshi Nakamoto. But then all of a sudden in 2018, a shift took place. He starts running his mouth with his good buddy Warren Buffett that Bitcoin is rat poison squared and nothing good's going to come from it. Only 5 months later, to announce that the Bill and Melinda Gates Foundation is partnering up with the company, it's this Plaxos or something, that's supporting Ripple on the Ethereum network so that we can help feed people around the world and have people get access to wealth since they don't have access to bank accounts. We're so benevolent. Yay, the Bill and Melinda Gates Foundation's backing Ripple. Say what? See, that's when someone like Bethany made a lot of money because I recorded that. I did a Facebook Live when that went down, and I said, watch, in the next couple of days, the price of Ripple is going to skyrocket. What happened? It rose by like 80% within the next 48 hours and then kept going. Complete hypocrite. See, I'm going to leave you with this because I got a call in the next couple of minutes. This is why yesterday I talked about understanding money. And the way I like to describe it in layman's terms for people to understand, money never runs out, but it will change course. Okay, you understand that? Money is like river. It never runs out, but it will change course. And most people are, well, everybody is fishing in this river for money. Some people have jet skis, canoes, regular fishing boats. Others have yachts, oil tankers, dropping huge nets. But the vast majority of people have a fishing pole and they're sitting on the banks of the river.